All right, stock market analysis. We're going to look at stock market conditions first, looking at our rankings system. The ranking system is very unique because it has our programmed algorithms in there and gives you conditions with a sum of the evidence condition on the 84 best traded symbols. Those would be the 48 best stocks, 12 best ETFs, and the 24 or so futures and indexes that we look at. So what I'm going to do is I'm going to go to the askSlim page because I want you to see how to access this if you are a member. People that can access who are level 3 members or level 4 or 4 plus can access it. I'm going to go to the workbench right over here, and I'm going to click on that, and you will see what the workbench looks like. Actually, this is showing you some things that are for our level 4 our level 4 plus members. They can access they can ask for specific analysis, and then we do custom analysis for them, as you can see in here. And then level 3 members get to see that analysis, but don't actually get the links for it. Here's a trade ID on Taiwan Semiconductors. You can see what was put in here in this timeline that goes in there. But I really want to show you the rankings is what I want to do. And I'm going to click on rankings, and it's going to open up the rankings page. This is the Slimulator ranking system. And I'm going to go down here to that page right there. It'll take a moment to load because all these algorithms are running live. And you get an idea of what we have in here as we have the symbol, the directional bias, the outlook for the next 3 to 6 weeks, and then the conditions, long-term, intermediate, short-term, and the option bias indicator, and the charts that are in there. Just click on here and the charts pop up. So what I want to show you is that the sum of the evidence essentially gives you this outlook right here. And you can see here looking at these stocks. I really want to go down to the stock market right in here, which has the information that I want to share since we're doing stock market analysis. I'll leave it right there. You can see in here that the gold market there is neutral, that's GDX and GC, but we're just focusing in here on the very bearish conditions, as you can see. Long-term, intermediate term, short-term, option bias indicator, all giving you very bearish conditions. And it's been like this for a long period of time. And this is important when you put all the pieces together. If you, I'm going to show you the chart for the S&P 500 in a moment, and clicking on here would essentially open up that chart. But I wanted you to see these conditions as they exist in there. And interestingly, the option bias indicator is when it says N2, it's slightly oversold. N3 means it's not oversold. There's a big momentum on the downside yet. And that's the difference between what you see here. Favors short side bias, suggests very strong negative conditions. The S&P 500, because it is slightly oversold, is giving you just a slightly different reading in there. But this is the extreme bearishness that all of our sum of the evidence is suggestive of. So I wanted to show you that so you could see the conditions in here. And you can see the 84 different symbols that we look at are all in here. Take a look at Bitcoin. You can see that very, very bearish. This is just a great app for level 3 and 4 members. So I thought that was important because I wanted to show you the condition of the stock market. If you want to become a level 3 member, this is the an offer that we have right now, and there are 10 reasons to become a level 3 member. You get our ranking system I just showed you, our daily trade ideas, our stock index report daily snapshot, our SIR live stream for scalpers, chart streams live that gives you all of our proprietary indicators on 11 of the key indexes, in futures, also the Slimulator Momentum Tracker for investors, our 600 plus video library, it's new cycle low tracker, new askSlim Discord server where you connect with the community and talk to our team, and the new Futures Hub, which is just mind-blowing. It's so good as a spot to go see all of our analysis. We have a special right now, 1 month, 50% off for $59.50 versus $119 a month for all of that, or save even more money. You save $125. It comes out to $77 a month. If you subscribe for 3 months. You want information on that, write to Matt at askSlim.com, or if you want to sign up now. Way up over here you can see on the front page We're in our last 2 days of this special, so don't miss this opportunity to get that ranking system and so much more. So I wanted to show you that and let you see the ranking system and the condition of the stock market looking at that. Well, let's get back to the stock market now. We're going to look at the S&P 500 weekly cycle analysis. Stock market now really coming apart now as I'm doing this analysis and breaking some very key levels in the stock market as sellers have come in very aggressively here on Friday. Let's switch over to the S&P 500 SPX, and there is a lot of meaning to the level that we see the market moving down to right now, and I'm going to show you that as we zoom in on this weekly chart. First of all, if you did not see the beginning of the show with the my showing of the last 25 years and the traps that the Fed has set, then I think it's important to go take a look at that right now. Because the stock market is falling very hard as I speak, with the S&P 500 down almost 60 points after being up 40 earlier in the day. So there's that big pandemic bubble, this big rally pushed up by the Fed and the government during the pandemic period. And now let's look where we are. So this is the weekly analysis on the S&P 500. The top was set in this cycle right in here, which has this negative configuration as we have shown. Many times discussed this. The rally in here that we got was, the highest probability was that it would fail in this area right here in these resistances and then move down. The fact that it got down under these levels right over here says that the head and shoulders top was completed, as I showed earlier in the show also, and then it began to move down. It left this tail right over here. Now, there was a low that was due right over here, and we thought we'd get a rally. Now, we don't know whether that was the rally and it ended in a week, or this is the rally. Actually, there is no rally in here, and to be looking for a rally now seems like, well, it's almost silly. The what happened was that now that this low has broken right over here, it sharply lowers the likelihood of reaching the resistance level up here that we talked about. That was around between 41.35 and 41.50. That was the expectation, that there would be a bounce in here. But now, because of breaking these lows over here, what it does is it tells us that we're really in this channel right over here moving on the downside. And that the likelihood is that the minor resistances will stop an upside bounce. Now, these are declining right now, and I haven't updated them yet. So what it says is that you could probably get a bounce up in the area of 40.25 to maybe the center, this area here, about 40.75. That would be where we would expect the bounce to come and then be moving down again sharply. So there is likely to be several waves on the downside right over here, and our projection is for that August to October bottom right over there in following this downward movement. There will be big rebounds in here where the market does try to come back. And that is likely to really hook some people in. Again, these minor resistances are the areas that we're looking at right now between 40.25 and 40.75. 40.25 to 40.75 is a best case that we can make right now, because the minor resistances are now coming into play. They were not until we got under this level based on cycle analysis. So we're now running past this ideal low. It means that these rallies in here somehow were the rallies that, that began this next rising phase. And while there's an outside chance that you get another rally in here and we start to wonder about whether or not it's that rising phase, the chances of getting up through the minor resistance zone is very small. So we're going to look for rebounds to potentially occur, getting somewhere over the 40,000 mark, and those numbers are falling right now based on getting under this level, and then continuing to move down with that real bottom expected out in October. Now, one more thing I want to talk about. We talked about in the beginning of the show the potential for an extension of the bear market that lasts for a much longer period of time. This next cycle, this next harmonic family of cycles out there, aligns with what we look at as far as our very long-term picture. That's the 7-year cycle, 28-quarter cycle, all of that. It is very unlikely, in my opinion, that a bear market ends in here. It's much more likely that it extends out here to February of 23. I want to keep that in mind and introduce that idea. And yes, in the beginning of the show, I talk about the potential for the big rally that occurs sometime late summer, and that would be off of these lows that we're projecting out over here. And that could be a rally that gets you from, let's say, 3,500 all the way up to over 4,000, 4,200. That's possible. And in my opinion, that would be just a hook. Talk about those hooks a lot in the beginning of the show, so I want you to go back and look at that. So this is the bigger picture as we see it right in here. The big pandemic bubble ending, the bear market in here beginning, and the downward breakdown from that low that we see right there, suggesting of lower rebounds, but still the potential for some rebounds coming. Right now the market is getting sold off very hard as the market is really being overwhelmed by the people that have to sell. That's what's going on right now in this liquidation. There'll be periods where it ends, there'll be rebounds, but then moving back down to the downside.